Coming up in today's video, Trump announces a massive trade agreement with Japan, how this impacts gold, the dollar, which is moving higher, and take a look at Japanese stocks here. In this video, we'll be taking a look at currencies, commodities, and indices, and I invite you to stick around. If you're new, make sure to hit the thumbs up button, subscribe. Let's get into it. Welcome back to the channel, guys. Today, me and SpongeBob, as you can see here, are going to be taking a look at some of the major market moves that we are seeing in response to what is a pretty exciting announcement. Trump announcing a big trade agreement with Japan. Here's a quote from Trump saying, "I just signed the largest trade deal in history. I think maybe the largest deal in history with Japan." And I'm not going to do it, but you know exactly how he sounds when he says this. You guys know those Trump impressionists. Those are so funny to me. The greatest of all time. They had their top people here, and we worked on it long and hard, and it's a great deal for everybody. The deal will see U.S. importers pay 15% reciprocal tariffs on Japanese goods exported to the U.S. But importantly for Japan, the 15% rate will also extend to automobiles and car parts, putting it at an advantage over other major vehicle exporters, which have faced a 25% levy on automotive sector exports since April. So here's how it works. If you're in the U.S., you probably already know this, but in the U.S., we love cars from all over the world, and big exporters like Europe and of course Japan send a lot of their vehicles to the US. We also do a lot of the manufacturing with the help of Mexico and Canada, and so it's this big shopping market in the US for global automobiles. And so with Japan getting off with a pretty good deal, I think all eyes are now on Europe, who may be feeling the pressure. If the advantage goes to Japan for working with the Trump administration, there's a little bit of game theory at play here, where now Europe is like, hey, we need to close in on this deal and make something happen soon, or we're going to be losing to our Japanese counterparts and rivals. And in the US, we love Japanese cars. Things like Toyota, Nissan, Honda, you get the point. All of these are huge purchases from Japan to the US. And so this was a big win for Japan. Let's take a look. Just look at the Nikkei here today, up 4.65%. That's an index level move. And of course, this just goes to show the US is the biggest customer of Japan. They want to do business with the US, and a deal in progress is a very positive catalyst for Japanese stocks. And while the Japanese stock market is not quite at all-time highs, it's pretty close. And I would not be surprised if we did see a push back to those previous all-time highs pretty soon, and perhaps even beyond. I'm interested in watching the Japanese stock market on a pullback, specifically this area that we just shot off of. If we do come back and retest that area, to me, this may be a long opportunity. Here's a look at the Nikkei on the Edge Finder, also getting a bullish reading, alongside US indices as well. Both the NASDAQ and the Dow and the Russell and S&P all getting bullish ratings by the Edge Finder right now. And if you've pulled up a NASDAQ daily chart, then you know it's been a absolutely monster year for the NASDAQ in terms of a recovery from those lows. And what's interesting here is that the Edge Finder gave a bullish rating at a pretty considerable level for the NASDAQ as early as, well, technically the first one was April 4th, but there was also strong readings that came in April 15th, 16th, 17th, and we've pretty much consistently stayed bullish throughout this whole rally. And so the Edge Finder staying bullish has kept me long a lot of different stocks that I bought in the market sell-off from this signal, as well as, in and out of the major US indices with a long only bias since this market sell-off. This has been the correct call, and the Edge Finder has been spot on this. Here's a look at gold going back from February. This too has had a pretty resounding bullish setup in the Edge Finder in terms of its historical score. And what you can see here is that now it's a little bit more mixed than it was, but for a while it produced a really strong signal at a great time to stay bullish on the gold market. And if you don't have access to the Edge Finder, do not miss the chance to pick it up for such a low price. Currently, we're offering 40% off on the Edge Finder, and for those of you who are watching my video here today, we are offering an extra 5% off if you send us a direct message using the first link in the description down below or in the pinned comment of this video. When you click that link, you'll be offered to start a chat with our support team. Just click the 45% off Edge Finder summer sale, which is ending soon, to take advantage of the huge discounts that we are running for a very limited time. This will connect you with a real person on my team, and the reason we do it this way is so that you can ask the questions that you need to know before you purchase. And also, if you made it through my ad here, we do also offer to split this into 3 payments if that is easier for you to take advantage of the sale. We do not want people to miss this opportunity because it is the best discount that we'll be offering all year long in the Edge Finder. So don't miss it. First link in the description down below or head over to our website, a1trading.com. Let's take a look at the dollar in response to all of this, and we see there's not really a huge movement in either direction. Dollar has been down here this week. And to take a look at the 4-hour chart, you can see we rejected off of this area of resistance around 98.8 and have been moving lower since. Path of least resistance for me on the dollar until further notice still is down just based on price momentum. But to me, if I had to pick a direction, I would actually pick sideways because I don't really see a strong reason to get more short on the dollar due to specifically what we've been talking in the last few days videos about, which is the strong jobs data out of the US. Here's a look at the US economic heat map, and you can see specifically that jobs data has been coming in very bullish for the US dollar, specifically the non-farm payroll, which came in better than expected. We also had job openings, which were strong, and initial jobless claims, which were good. We'll get more of that tomorrow, by the way. We'll get the weekly jobless claims numbers, and we had unemployment rate tick lower. So jobs data looks pretty strong. So to me, that's not an environment where I want to get really short on the dollar because that does kind of put at bay the amount of rate cuts that we'll see this year, in my view. But we do also want to keep an eye on inflation. In some ways, we also had good retail sales numbers, which is not inflation, but we had CPI, PPI, PCE numbers. It's been a bit of a mixed sentiment when it comes to inflation, but a strong one in terms of jobs. So overall, the US impact here is still very neutral for the currency and for stocks. Also, the economic heat map showing a little bit of mixed sentiment. You have cooling inflation, mixed cooling inflation, and some growth that looks a little bit soft. Just a mixed picture here. And so when it comes to the US dollar, my personal view would be I don't really see it moving a whole lot of either direction until you get a stronger conviction, meaning, for example, maybe jobs data materially weaken, in which case you have cooling inflation and cooling jobs. That could be a downtrend catalyst. Or if inflation tightens up further, jobs data stays strong, and you get some growth metrics that look good, the dollar could rally. So again, to not be frustrating, my opinion on this is pretty neutral. I don't really have a strong opinion, and sometimes that's okay as a trader to just not have a strong conviction one way or the other. I actually feel similarly about my gold position, which may come as a surprise because I'm long gold. If you've been watching my videos, I went long here back at this time, but since then my perspective on gold is sort of neutral. I'm just letting price action guide my position from here. When I took the trade, I felt more strongly about it, but now that I'm in the trade and my readings on the edge finder for the dollar kind of mixed to neutral at this time, with gold hitting this previous all-time closing high, not necessarily the intraday high, but the closing high, I'm just a little bit skeptical, and I'm just going to let price action guide me from here. I would love to see this thing rip through the highs, in which case I could trail a stop, but currently my approach to gold is I've just moved my stop loss into profit. I can't lose money on this trade, but I don't have a strong conviction in terms of short-term direction for gold from here. And this is okay. I think I need to reiterate that you don't always have to have a strong opinion in markets, and actually having a strong opinion all the time and refusing to let go of that strong opinion can cost you a pretty penny. I also wanted to take a look closer at the global indices. With what I said earlier about the Nikkei looking strong, I wanted to approach this a little bit further. For example, we are getting strong readings on the NASDAQ, the Dow Jones, and the Nikkei, as well as the Russell, the S&P, and the Chinese stock market. But I do want to clarify that just because the edge finder has a bullish reading does not mean I go out and I buy it right at this time. I do also play a big part of what I do in terms of entry timing does come from the technical analysis side of things. While I am bullish on indices, I'm still waiting for pullbacks, as I do think that they short term on a technical basis look a little bit stretched. So for example, here's a look at the S&P 500, which is near its all-time trading high. And I think it's very plausible that we could get a 3 to 5 to 6% pullback in the coming days or weeks. It's not something that I'm betting on, but I think it's very normal for indices to pull back after having such a one-directional move in markets. So in terms of long positions, the bare minimum that I'd be looking for would be a 3 to 4% pullback down to the 6,100 level on the SPX or the 22,100 level on the NASDAQ. Dow Jones, I'd either be looking for a pullback to 43,000 or a break and retest of this 45,000. The German DAX is also interesting to me if it can get a bigger pullback going. And the Russell does look good to me if we can get some pullbacks as well. On the Russell, I'd love to see a pullback of somewhere around 5%. And as I mentioned earlier in the video, the Nikkei looks good to me if we can get a pullback to 39.5. But part of my hesitation for trying to get long at this time is because volatility has really dried up. And what I mean by this is that the VIX index here has shot all the way down to 16.10, which is a very low level of volatility in this market. But when it comes to volatility, I am certainly more on the side of contrarianism, if you will. And what I mean by that is that we hit some very, very high levels of volatility over here. But recently, we've completely dried up. And so markets have gone from feeling super, super terrified to and expecting huge moves in the future to now not really expecting a whole lot of things to happen and really going back to more of a peaceful times environment. And I actually don't necessarily think that that is a great assumption to make about forward-looking returns. And I do think that we could get further bouts and spouts and spikes in volatility in the remainder of this year. I don't think it's going to be smooth sailing for the rest of this year. And if I'm wrong, then I may miss out on some upside, as I have sold some covered calls and stocks that I own, and I've trailed out in profits with some of my index longs that I've traded. So I do think the risk to reward on stocks gets a little bit more attractive if we get some pullbacks first. And today's video is sponsored by Vantage. Vantage Markets allows traders outside of the United States to access a huge list of products, and they're offering a very generous welcome bonus to subscribers of my YouTube channel at this time. They offer low trading fees, they have a copy trading service that you can sign up for, and they also offer a welcome bonus, as I mentioned, which can be found using the specific link in the description of this video. They've set it up custom for us, so do not miss that opportunity. If you are interested in exploring a new CFD brokerage, this is unfortunately unavailable to US traders, but if you're outside of the US and you're looking for a better CFD brokerage, explore Vantage down below in the description, do your due diligence, and see if it's right for you. Now back to the video.
Now, interesting reaction today from global markets to the news that President Trump has struck a trade deal with Japan that lowers tariffs on a number of products, and the markets like this news. It's probably the most significant, isn't it, of a clutch of agreements that Trump has bagged since unveiling the global levies in April. It's good news, I think, right, Nick?
Definitely good news, Johnny, especially if you're like me in the US and you like Japanese cars, because of course the US is a major consumer of Japanese vehicles, and these were considered largely by the market to be sort of hospitable, sort of favoring towards Japan. Clearly, take a look at the Japanese, the Nikkei, right, up almost 5% here today. That is a clear and sharp reaction in Japan to this trade deal that seems to be what was a worry now kind of shrugged behind them. We saw this a couple months ago when we talked about the UK and US signing a deal pretty quick. It gives this sort of to investors, businesses, CEOs of that nation, it allows them to say, okay, now we can move on with our lives and start focusing on our individual businesses and things that we need to do, right? These tariff uncertainties have been largely seen in many different earnings calls across, companies all over the world, issuing that uncertainty about what was going to happen with trade dynamics and tariffs and how it could disrupt their business. Having a signed agreement is massively favorable, specifically to the corporations in that country who have been dealing with the uncertainty. So I think it's a sigh of relief for many of the Japanese automakers who, as I mentioned, have huge customer bases in the United States, globally too, but of course the US is sort of the powerhouse consumer of Japanese vehicles. So when we look at this situation, you can see the market is rewarding trade deals very sharply. There's a number of things I want to talk about on this, but first and foremost, a quick reaction. US markets did not move tremendously in either direction from this, just modestly higher in a sea of upward days in the last few months. We've just seen, nothing but green for the most part in major US indices. But the Nikkei has been hovering just below, its all-time highs for, I shouldn't say just below, but, between 5 and 10% below its all-time highs. It now looks like it may be headed to test the all-time trading high, which is, just a clear example of maybe more so than the US, in this dynamic is the individual company that signs a deal, it is favorable to them. We saw that with the UK. We saw that, that kind of released a little bit of pressure there. And it is largely expected that the EU and India will follow. But there was something else I wanted to point out about this. Actually, Kenny brought up to me before we jumped on the podcast here. We talked about Toyota, which jumped 13% on this. That is a huge jump, just showing even on the individual level to this. You can see the sigh of relief visually in the chart when you look at Toyota Motors. Motor Corporation up, like I said, 13%. But there's something else I wanted to talk about here. We know that Europe is circling a trade deal with the US. We also know that Europe is a major exporter of automobiles to the US. And we also know Japan and Europe in that regard are competitors to tapping into that US marketplace. It is actually also largely expected that Japan got the best of the deals in terms of what we've seen so far. And so if I'm in Europe and I'm an automobile manufacturer, I'm a little bit looking around the room right now, and I'm saying, okay, we need these deals made pronto. We need, because if we get caught behind the curve on this trade deal game theory that's at play, that poses some risks. That seriously makes Japanese automobiles more competitive with a better trade deal. You can see how this sort of extrapolates across an entire economy. If you have the better deal than your rivals and rival competitors, it disproportionately favors you. So there is some game theory at play, and we'll see how it all plays out. But definitely a welcomed piece of news for markets globally. We do actually see the German DAX up a bit on the day. We see Chinese stocks up on the day as well. We see the Nikkei, as I mentioned, up quite a bit. So you have a sharp reaction internationally to more deals equal good news. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.